Good evening. You are listening to Daily Market Wrap, presented by Boswell Institute. I am your AI anchor, Ruma.
It was a classic, high-friction monthly derivative expiry on Dalal Street today, as early morning gap-up euphoria was systematically dismantled by an aggressive sectoral rout across high-multiple technology counters and today Tuesday, 30th June, 2026. The global macro landscape gave domestic bulls plenty of ammunition early in the session. Brent crude futures cascaded further down to a multi-month low near $73.90 per barrel as progress in West Asian diplomatic channels eased historic logistics constraints through the Strait of Hormuz. On the domestic front, the Finance Ministry injected immense thematic energy by clearing a massive 1.25 lakh crore rupee allocation for the Semiconductor Mission 2.0. Yet, all of this fundamental optimism evaporated the moment the opening bell rings, completely neutralized by quarter-end rebalancing and extreme derivative expiry volatility. The Nifty 50 launched with an impressive 86-point gap up, briefly attempting to reclaim its crown above the psychological 24,000 line. But the recovery was instantly aborted. Foreign institutional desks aggressively dumped export-heavy technology giants over global interest rate concerns, sending the Nifty IT index tumbling over 2%. Dragged lower by sharp corrections in Infosys and Tata Consultancy Services, alongside a 4.5% slide in Eicher Motors, the frontline index gave up its opening gains entirely, sliding below the key threshold to finish 80 points lower at 23,865.75. Over in the financial trenches, the script was equally challenging. The Bank Nifty opened spectacularly on the doorstep of 58,000 but touched its intraday high on the absolute first tick of the session. As the afternoon rolled in, aggressive short sellers took absolute control of the tape, forcing a massive long and winding squeeze across private financial components like ICICI Bank and State Bank of India. The banking benchmark shed nearly 185 points, locking in a defensive closing print at 57,542.90. Technically, today's daily shooting star candles demonstrate that the market is inside a critical consolidation and base building phase rather than an outright trend reversal. The bulls have retreated to their primary lines of defense, leaving shorter momentum leaning entirely in favor of intraday sellers as we cross into the July series. This is for educational and informational purposes only and do not constitute financial advice or a recommendation to buy or sell any security. Stock market trading and investment involves significant risk. Please consult with a certified financial advisor before making any investment decisions.
Stock market trading involves significant risks. Happy trading, stay tuned. We will meet on next market day, same time, same place. Till then, goodbye.